Hi, everyone, and welcome to this episode of Make Business Better. I'm Zach Seward. My guest for today's episode is Hana Kajimura, who's the head of sustainability at Allbirds, the shoe and apparel company with those famously comfy wool sneakers. I wanted to talk with an executive at Allbirds because I think the company really embodies a few important business trends that are intersecting right now. Now, first, Allbirds is a direct-to-consumer or DTC business, originally launched on Kickstarter, found its growth by engaging a passionate early fan base of customers out in the Bay Area, really eliminated entirely the middleman of retailers like Foot Locker or even Zappos that tended to previously dominated sneaker sales. And there are other DTC fashion companies in this vein, like Warby Parker, which went public earlier this year, Rent the Runway, which went public just last week, Glossier, rumored to be preparing an IPO, and Allbirds itself went public last week. And its shares nearly doubled in the first day of trading, with the company and its DTC model now valued at $3.5 billion. The second reason is that Allbirds is, I think, an example of a fashion company that's truly putting sustainability at the core of its brand and purpose. I mean, there really isn't a apparel company out there that isn't talking in some way about their commitment to sustainability. But certain companies, and I count Allbirds among them, have made it core to what they do. Another good example is Everlane, another one rumored to be preparing an IPO. Allbirds literally puts the carbon footprint of its shoes directly on those shoes, and recently made some ambitious sustainability commitments, which I'll leave it for Hana to explain. In going public, Allbirds is telling investors that it's going to privilege environmental concerns sometimes over maximizing profits. It's a public benefit company, a certified B Corp, and we're about to see how those kinds of commitments fare on the open market with investors for a company that still needs to grow, is not yet profitable, and is going to undoubtedly, find itself under investor pressure. But key to those sustainability commitments and so much of what Allbirds does is our guest, who we'll bring in now, Hana Kajimura. Hana joined Allbirds in 2017 as the company's first sustainability hire. And prior to Allbirds, Hana was a consultant for several years, including a stint at Google X. Hana, welcome so much. Thanks so much for joining us.
Hi, thanks for having me.
Well, first of all, anything in my introduction that you feel like is I got wrong or unfair, you'd elaborate on?
No, I think you covered it well.
All right. Well, so we'll get right to the crux then of the question I posed at the end of the introduction, which, I'll be fair, you're only a week into being a public company, so I can't imagine you really know the answer yet. But I have to imagine that there are folks within the company or fans of Allbirds shoes who really take seriously the company's environmental commitments and are concerned that that's going to come up against the need for growth, which in lots of other industries has led to really disastrous environmental consequences. Rather than how's that going to go, I'll have you back in a year to tell me how it's going. For now, how are you thinking about that and upholding the commitments that Allbirds has very publicly said we're going to get to nearly zero emissions by 2030. So, like, you've got a lot on your plate. How are you gonna think about that as a public company now?
Yeah, I think actually in more ways than not, the sustainability objectives are very much aligned with the investor objectives. And what the real challenge has been is trying to communicate that and trying to change this paradigm of thinking that exists, which is that sustainability distracts from growth and from profitability. Certainly, there are areas of sustainability that are in conflict, and we deal with those on a day-to-day basis. But it just requires a different mindset where you say, I'm going to push through those things and figure out a way to hold both. It's not easy. It's definitely a lot harder, but there's a way through if you have the conviction and the commitment to do it. We think sustainability really drives our value proposition with the customer. We think it attracts more customers to our brand and keeps them with us longer, particularly younger ones. And many sustainability initiatives help create business efficiency and even cut costs, whether we're talking about trying to ship product by ocean instead of planes, or use materials and resources more efficiently. Like all of that is just good business sense.
Mm-hmm.
I think the big challenge is that our society and industry is not set up to do things that way. And so it's a lot of re-engineering very age-old processes to try to do them more efficiently and try to use the technology that we have today to do so. But in the apparel industry is very old and pretty low tech for the most part. So trying to convince people that there is benefit in restructuring the way that we work.
That's fascinating, and I want to get into what the biggest challenges are for hitting the commitments that Allbirds has made in a second. But what you're just saying is really interesting to me, because often you see sustainability portrayed as good for business, in the sense that like being more efficient, cutting costs is good for business. But of course, and I think you were kind of implying this, that's a perilous argument. Like we're for protecting the environment as long as it's contributes directly to the bottom line. Whereas, and you're hardly alone, I mentioned a lot of other examples of companies like this. I think what's really notable about what Allbirds has done is baking the sustainability into the brand, so that, as you were saying, like, I mean, if you don't uphold those commitments, it's not probably the investors who are going to punish you, it's customers, and that at the end of the day is far worse.
Yeah, I mean, it's everyone at this point, and that's like the whole idea of being a public benefit corporation, is being accountable to all these different stakeholder groups. And I think now, certainly more than ever, investors are one of those stakeholders. And I think due to the way that we ran the IPO and really put sustainability at the center of it, and then how it's turned out so far, I think that's a clear signal that people are buying into the sustainability mission and are going to hold us accountable to it, which sure is like a little bit, it's a lot of pressure, but I think it's exactly the right kind of pressure, and is probably the only way that we'll ever hit these targets as a company. But I mean, even in the broader sense of what governments need to do.
It's a cool trend to my mind. It makes me think of when Google sort of famously started the trend of founders, when the company the IPO is, writing a letter that says, like, if you expect short-term profits, find a different company, and that became sort of the standard for most tech companies on the public markets. And now, it's certainly not the standard, but I would bet 5 years on, you see a lot more environmental commitments baked into corporate charter as a B Corp, or just into, from a founder's letter perspective when the company is going public. Like, if you expect us to cut corners at the expense of environment, you should be holding shares in a different company.
Yeah.
Cool. So let's go to what the challenges are. So am I right? The commitment is by 2025 to have reduced emissions related to, well, you tell me, you're the expert.
The simplest way to put it is that, so as you mentioned in the intro, we label all of our products with their carbon footprints. Mm-hmm. And that basically means we're quantifying the emissions created across the entire life cycle of the product. So starting with sheep on farms in New Zealand, all the way through to manufacturing and transportation, and even how you as a customer are going to care for that product over time.
Like washing it.
Yeah, exactly. And that number goes on the shoe. We're going to cut that number in half by the end of 2025, and it's going to be less than 1 in 2030. So less than 1 kilogram of CO2 per product that we produce. And
the average shoe, or the wool runners right now, or what?
Yeah, so on average, our footwear is about 10 kilograms of CO2, but when we bake in everything, all of our apparel products, the emissions created from employees traveling, commuting to work, like all of the office, retail stores, et cetera, we're at about 14. So in 2025, it'll be 7, and in 2030, it'll be less than 1. And that's effectively what we need to do to get to net zero emissions across our business by 2030.
Got it. Well, so currently for the 10 or 14, levels, what is the biggest contributor to emissions for the business?
Yeah, we've seen it shift over time, actually. I think traditionally materials are going to be the biggest source of emissions created in like any consumer product, that physical good that you purchase, because you think about all of the energy that needs to go into growing something or producing a metal or whatever it might be. Um, and that's where the bulk of emissions typically is. We've done so much work over the last 5 years to create new materials, to swap in lower carbon materials into our product. And now we're seeing like really the biggest category of emissions is around energy that's being used to mill fabrics, create yarns, create shoes in factories. Even when we define it in terms of fuel, like shipping fuel around the world, how you as a customer are using electricity in your house to wash and dry the product. And so a lot of the work ahead of us actually is around getting people to use less energy, but also finding ways to use renewable sources.
In both the manufacturing of the products and shipping them.
Yeah.
What was the cause of this shift? Is that due to changes in the business growing and or something else?
I think it's due to the progress that we've made. So as one example, when we launched the shoe, the bottom unit of the shoe, the sole was made from just normal EVA foam that's derived from fossil fuels. And we actually created a whole new material for that foam that's derived from sugarcane. And because it comes from a plant initially, that resin is actually taking in more CO2 than it takes to produce. And so that really dramatically lowered the material's carbon footprint of our product.
We recently did a project at Quartz to evaluate our own carbon footprint as a company. We're a digital media company. We cognizant our footprint is negligible relative to other industries. But one thing I quickly discovered is the estimates we were getting from companies that do that kind of thing were all over the place. How do you, which I gather is common. How does Allbirds work to add and maintain rigor in the measurement of your emissions? Are you using a third party? And well, let's start there. And I'm curious where you see that going in the future too.
Yeah, I mean, we spent a ton of time on it over the last few years. We started working with like an independent consultant very early on to develop the initial version of our excuse me, I have something in my throat.
No problem.
Of our own carbon footprint calculator, which we've open sourced, you can download it from our website. And I've just focused on improving that over the years. I think like as a younger company, as initially a private company, we really embodied this idea of progress over perfection. And the idea that like an 80% answer is better than a 0% answer. So we're going to start with the 80% good answer and keep working to improve it as we learn more. But we're not going to let us slow that down from taking action. Like orders of magnitude, these numbers are right. Like we're not wildly off. Sure, the decimal point might move a little bit, but like that doesn't matter in the scheme of action. And what we really need to do is just start working to drive it we know we have to get to zero. Whatever it is today, it has to get to zero. And so that sort of empowers us to just start working on it.
Yes, fair enough, right? And I gather that the bigger debate is like how many levels out from the core company do you count as your impact? Well, let's talk a little bit in that vein about being a B Corp. So, my sense is as the sustainability commitments become more important, both to consumers and investors, and you see more companies making these pledges, there's going to be a bigger need for third-party auditing and establishment of standards so that your claim about Allbirds carbon footprint can be compared to the competing shoe for
Mhm.
at least for consumer. Maybe it's an FTC issue as much as a
Mhm.
SEC one. All right, so if we assume that, I think B Lab, which adjudicates like B Corp certification, is the closest we have to that right now. That it wouldn't work, as a government regulator. What do you interact with the folks there, and if so, is that like what is the auditing process of being a B Corp been like so far?
Yeah, very much so. Being a B Corp is a very core part of our identity. We joined in 2016, which was effectively when
Early,
we started.
and early for the B Corp movement too.
Yeah, and so what that looks like is effectively every 3 years, you have to undergo a very rigorous certification process where they come in and you ask 300 questions across the business, and it covers really every area of the business. So it's not just like
Sure.
what really surprised me in doing it for the first time was like I could only answer like 20% of the questions as a sustainability person. Like the rest had to come from supply chain and HR and workplace, like all these other retail, all these other parts of our business. So it's super comprehensive.
Mm-hmm.
And of those 300 questions, you have to score above 80 points in order to qualify as a B Corp. And the traditional company, like the average company that goes in and tries to certify, scores around 50. So the bar is 80. And then there's really no like, I think the highest scoring B Corps are up in the hundreds somewhere. But of those 300 questions, each one is only worth like a fraction of a point. And so you really have to amass a ton of good answers in order to qualify as a B Corp. And for us, we also went through a very extensive like validation and verification of that score through B Corp with auditors coming on site to make sure that our answers were correct, and all sorts of things. But yeah, I think you're exactly right that like as businesses sort of build the muscle and the courage to start talking about sustainability publicly, there's going to be more need to make sure that those claims are legitimate. And B Corp is one great way to do that. I think it is the most rigorous way to do that out there so that when the customer or the regulator, the investor sees that logo, they can know that this company is not just making claims, but they're backing them up, not just through their product or through their marketing, but through the way that they run the entire business.
As someone who follows this field, are there, I won't make you name names, but are there practices, like types of sustainability commitments that are more likely to be greenwashing that those kinds of audits might help root out?
Yeah, I mean, the thing that comes to mind most quickly is like claims around sustainable products. I think we're seeing a proliferation of like eco collections or like sustainable collections from like large companies who are trying to slowly like grow the number of products that they have that are quote unquote sustainable. But like, what does that mean? Does that mean that 100% of the materials in that product are better? Does it mean 10% are? And once you have to actually back up some of those claims with data, like what percentage of your material by this year was certified to an environmental standard, and you see that percentage is actually only like 5% of overall product, let's say, like that, I think you start to put numbers behind some of the qualitative claims.
Yeah, it makes sense. Courts had a great piece as part of our COP26 coverage that like net zero to date has mostly been a boon for like companies consulting other companies on like how to even
How
think
to do
about
it.
it.
Yeah.
Yeah, so much as true progress. But I it's interesting to see with, if you think about the fair trade movement or the word organic. earlier, obviously they both are still, very much alive and growing. But when those first emerged, I feel like in the 90s, there was some of the same stuff, thrown around the word organic without a clear definition of what it means. And some of that stuff ends up getting regulated, obviously, like nutrition. I'm trying to speaking in the US just for simplicity, like nutrition facts. Like I could imagine that, the way you slap the carbon footprint on the shoe is sort of evokes nutrition facts. To my mind, Everlane kind of does a similar thing like that. Like, it's interesting to imagine a world in which that is required of all apparel. I mean, just on a personal level, is that something you'd like to see, or would that have unintended consequences? I'm not considering.
I mean, absolutely. I think it's both.
Okay, fair enough.
It is absolutely the world that I'd like to see, and I think the world that we're headed towards. I mean, we have been doing this for a year and a half now, 2 years, and in that time, we've seen more and more companies come out and start doing it as well. I think everyone is demanding increasing transparency, and specifically quantitative transparency. Of course, that then begs the question of, like, how do you ensure that people aren't just making numbers up or doctoring them to look good and putting them on products? There's a lot of ways to do that. And this is where I'm glad that I am not in the position of having to regulate this, because I think the big challenge is, how do you regulate it in a way that doesn't slow progress? Because, in this boon of sustainability and people trying to crack down on greenwashing, I think there's a lot of casualties in that too, of, looking forward, where the sustainability department's 90% of their time is spent justifying and rebutting claims that they've made, to the 100th place decimal point, when they should be working on the actual solutions. And so I think, like, the crackdown on greenwashing it is important to some degree, but could ultimately slow progress and resend the signal back to business that it's too risky to talk about.
Yeah, it's a great point. I mean, I noticed there's some reports that Allbirds' own IPO filing, got scrutiny over calling it a sustainable IPO, which I don't even know what that exactly means. But in any event, like, fighting over that kind of wording in an SEC filing is probably beside the point, relative to the kind of impact we could be making in just reducing emissions. And so, looking ahead now, Allbirds is public. You were, I understand, in New York for the big day, but now back home out west. What has anything changed? I'm sure there's some speech about nothing's changed. You got to keep our heads down, focus. This is just day one, but I don't know. It's a big moment for any company, and a lot of, I'm sure, staff with stock and all the rest. What's it feel like now that you're part of a public company?
Yeah, I think for the most part, I think it just brings everything into focus. It makes very clear what we have to do now. Speaking from the sustainability perspective, I think it feels as though, in July, we produced these sustainability commitments. It's the first time we really made, like, forward-looking statements about that. Sure, we put it out there. It was public. Our customers and media could hold us accountable to them. But now that we are owned by so many other people, it feels that all of that was sort of a stamp of, like, okay, this is real now. Like, you have to deliver on these expectations now, in a way that I think is awesome. Like, it makes me feel like our sustainability mission is even more institutionalized and ingrained, and that, in a weird way, like, shareholders are now in my corner of sort of getting the work done that I need to get done, and that I can use that to make sure that, as a check, to make sure that, like, we made commitments around, or we set expectations around growth and profitability, but we've also set expectations around our sustainability performance, and that's a lot of the reason why people invested. And so that is held on equal ground with some of the more traditional business metrics, and I think ultimately that will really help us to succeed.
Well, that's cool to hear, and it sounds like a great perspective on it, because I think a lot of us are cheering on, you know, specifically, but more broadly, the embracing of sustainable practices in industry, and idea that we need a form of capitalism that is not pursuing profits at all costs, and is able to balance the needs of the planet and social needs. Like, I believe that strongly. I know a lot of others believe it strongly. It's one thing to build, a small successful company based on that. It's quite another to see several larger companies face the public markets, have a global footprint. And I think it's too soon to say clearly how that's going to go, but wishing you the best of luck, because that's a bigger achievement, I think.
And I think becoming a public company has always been core to what we think success looks like in terms of achieving our environmental mission. Like,
why is that?
We're providing, our footwear is about 30% fewer emissions than standard sneaker. Like, we're trying to provide an alternative to shoes and clothes that are reliant on fossil fuels and high emissions. And, if we're 1.1% of the footwear industry, like, we're not going to have that impact. We need to be at the scale of the giants in order to like really provide the masses with a different option. And becoming a public company is like a key step for us in getting there. I do think, I don't mean to like paint the picture that this is all easy and it's you just have to like have the willpower. I think there are certainly inherent contradictions or tensions between lowering traditionally emissions are going to grow with business growth. Like, the more shoes you produce, the higher your footprint. And so to try to decouple those two and say, we're going to maintain rates of growth while bending the curve on our footprint, just means that we have to bend that curve even faster and harder. And that's sort of the challenge that everyone at Allbirds has signed up for. Is we know that because we have these aggressive growth targets, we have to decarbonize even faster than most. And we're just up for that challenge. We know it's going to mean slower sometimes, it'll mean more expensive sometimes, but it's the only way our business can succeed in the long term and be compatible with a healthy planet, where we can all continue to exist as a civilization. Is we just have to get to zero emissions if we want to exist in 50 years.
I had a question prepared that I decided against because it felt like an asshole to ask it, which is like, well, why not, just not produce shoes in the first place? Wouldn't that be the easiest way to get to zero emissions? But what I hear you saying is, no, you want to replace far higher emitting shoes that most of us are wearing today with more sustainable shoes that you and other companies are producing instead.
Exactly. I think certainly, like, if the world, as we saw during COVID, if the world stops spinning for a bit, if people stop driving, if people stop making things, buying things, emissions go down. And sure, that would be the fastest way for us to get there, but it's also an unrealistic way for us to get there. And I think in that world, we just lose time at figuring out how to have business. We need to figure out how to have businesses and products, clothing, shelter, food that is compatible with a healthy environment, because we all need those things to exist.
Yeah, and compatible with business growth, because they need that too. I totally agree. Well, Hana, this was really fascinating. I really appreciate you sharing all that insight, and we'll have to have you on again in a year to report back on how it's faring a year into the public markets. But good luck. I very much am rooting for you.
Yeah, I would love that. Thanks so much. This is great.
Cool. And thanks to all of you for tuning in. We'll be back here in 2 weeks on all the platforms, Twitter, well, not Twitter, actually, Facebook, YouTube, LinkedIn, and otherwise. You can always tune in Tuesdays at 11 a.m. Eastern time when we're live, or of course, catch the recordings afterwards on either of those platforms or on qz.com. Thanks again for tuning in. I'm Zach Seward. I'll see you in 2 weeks.